Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk about a really massive week for the markets, and quite possibly the biggest week we're going to have for quite a while once August kicks in. As well as that, I want to talk about how 4 of the Mag 7 can really have a potential dramatic impact to the market, and how in question whether or not the latest developments is another sign of a Trump taco trade. But before we get into all of that, don't forget, these videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do due diligence, and of course, the risks at hand for entering any trade. With that out of the way, let's get started. So yeah, in a nutshell, this potentially is a really big week for the market, a massive week ahead. It really has a potential to be a real bomb. But like I said at the beginning of the video, it might be one of the best weeks we may see for the next month or so, with August coming very, very, very quickly along. So let's start off with some breaking news, which we had over the weekend. We had yesterday, in fact, and that was, of course, that the Trump administration announced they agreed a trade deal, in principle, with the EU. And as always, when Trump makes an announcement, it's always the biggest. It's always the biggest. As he announced, this is probably the biggest of them all. Now, of course, this is really big news for the EU, who are the biggest trading partner with the United States. Okay, so this is big news for the EU. As mentioned previously on other episodes, the sort of amount of trade they do with the United States comes to around about 4.6. Okay, 1 second. Let me take a screen. Right, hang on a second, chaps and chapesses. I understand there might be a slight technical difficulty. Now, on the comment section, could anybody give me a thumbs up if you can hear me at all? Anybody give me a thumbs up to let me know if they can hear me?
Well, that was fun, wasn't it? 5 minutes into the show, and we have technical issues. Always fun. That is show business for you. So anyway, I'll quickly do my disclaimer for those who've missed it. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own diligence, and of course, know the risks at hand before entering any trade. I'm not going to go through the previous images straight away. I'm going to go straight into what we're talking about, which is the Trump administration agreeing a trade deal in principle with the EU. And as mentioned, this is indeed a pretty big deal for the EU because, like I say, the US is indeed their biggest trading partner, almost totaling almost 4.8 billion a year. Now, I must make this point. This is only a deal in principle, okay? And the deal is 15% baseline tariffs across the board on all goods the EU sell to the United States. Now, by all means, this is indeed better than the 30% tariffs that Trump threatened the EU to kick in on the 1st of August. But I make this point again, it's still an increase. Okay, don't forget at the moment we're paying, or the EU is not the EU, the American consumer is paying 10% baseline tariff on EU goods. Okay, don't forget that. It's now up to 15%. So again, I'm going to bring this up to my point I'm going to make in a second about something else I want to discuss. On the other side of the other trade deal, which was in principle, again, I do sound quotes because it's in principle, was announced last week, was between the US and Japan, with Japan apparently too much rejoicing were to invest 550 billion into the US. This is what was announced last week. However, Japan has recently come out to say, though it sounded like a very good deal for the United States, they only expect 1 to 2% of this 550 billion to be an investment. The rest of that capital, the rest of that 550 billion will be given to the United States as loans. So not the most amazing deal ever that Trump was boasting about last week. So anyway, what does this mean to market sentiment? Well, what this means to market sentiment is basically the hint of an EU trade deal and Japan trade deal. The market really does appear not to be giving really a care about any details, any underlying details at all of these trade deals in principle. They are just relying on basically the boost that we are going to get deals done before the 1st of August. Or also looking at it this way, that again, this is another sign of Trump chickening out. Instead of sticking to his guns, like he said many times before, I'm sticking to the deadline of 1st of August. They don't do a deal, then this is again another delay tactic, isn't it? But anyway, the market doesn't care. The market loves it. And at the moment, what we've been seeing, and we'll look at the markets in a little bit, is the S&P closing at an all-time high for 5 straight sessions. And it does indeed look like today it could even be the 6th day in a row of higher highs. But I'll bring me to another point I want to make. Again, this is good news. It is good news. It's something for the market to be excited about. But 15% is still 15%. Which leads me to another big event happening this week, which happens on Wednesday. Wednesday's a pretty big day for several reasons. But for the first one, on Wednesday is the Fed interest rate decision and press conference. Now, we all know, okay, that Trump looms over the Fed, and then particularly Jerome Powell, like a really impending storm. And we all know the pressure and the scrutiny the Fed has been under since they haven't cut rates. And it does appear, or this is what the market is assuming, that they are going to stick to their guns, and they are not, despite the pressure that Donald Trump is putting on Jerome Powell in particular, and questioning the 2.5 renovation of several Federal Reserve buildings, okay, that they're going to stick to their guns. However, there is a little bit of cracks in the Federal Reserve, where two of Powell's colleagues are warming to Trump's request, and by chance, both of these happen to be Republican, what are the odds? But anyway, two of them are warming to Trump's request about cutting rates. However, there are many others on the Fed who are backing Powell because they can see that the US CPI is slowly creeping up. And they have, I'm with them on this. We've yet to see the real impact, okay, of these tariffs on prices and indeed on the economy. So Wednesday, first big one, Fed interest rate decision and press conference, which moves me on to the labor market. Let's look at the labor market. Friday, another big event, which of course is the non-farm payroll. Expectation is for the number to come in at 102,000. Previous number was 147,000. Okay, now again, 102 indeed is a decline. But don't forget, we did a watch along on the previous month, the previous reading, where again the number was expected to come in around 130, but it came in better than expected. So are we finally going to see cracks in the labor market happening? But again, it's not just the NFP. It's not just the Fed. Like I said earlier on at the beginning of the program, for those who didn't hear me, obviously because we had audio problems, we have got such a packed week full of data. Massive economic data coming through this week. We have Australian CPI, German retail sales, German GDP, EU GDP, US ADP. Sound like a rap. Bank of Canada interest rate decision, the Fed interest rate decision, as just mentioned, US PCE, EU CPI, US non-farm payroll, and US ISM manufacturing. So we absolutely packed full of economic data this week. So a massive week ahead, but it doesn't just stop on that sort of economic data or trade stories or trade negotiations. Doesn't stop there, because something else big is happening this week. And that is the question the market needs to ask. And like I said, we are looking potentially at the sixth day of gains for the S&P, or six higher highs for the S&P. Question is, this relentless advance by the S&P 500, where we've hit higher highs, does face a real crucial test this week. And that is because 4 companies with the combined worth of 11.3 trillion report their earnings. The big boys. 4 of the big boys. On Wednesday, we have Microsoft, Meta platforms report their earnings. Thursday, we have Amazon and Apple. And the big tech has really been driving the S&P 500. As you see, the biggest contributor to the S&P's success so far this year is NVIDIA. Just below that, as you can see, is Microsoft. Then Meta. Bringing up the rear is the S&P, is the Amazon and Apple. I see, pull it in. No, not Apple. Let's pull it in bigger so I can see it as well. It's Alphabet and Amazon, and then we have Tesla, which is not having a good year, and Apple not having a good year. Just so you know, this is the performance. The pink are the performance of the Mag 7. The yellow is the remaining companies, or the rest of the S&P 500, which have been pretty stable. So the whole drive in the S&P 500 is really been driven by the Mag 7. So we're getting 4 of them releasing their earnings. Microsoft and Meta, like I said, perform very well. Amazon and Apple not so much. So my point being about this is this could really break or make the S&P 500. Don't forget, the S&P 500, half the reason why it was bullish and it's been hitting higher highs was Google or Alphabet's earnings, which came in a lot better than anticipated. A lot better than anticipated. Now, however, how about the other 4? How about the 4? Meta and Microsoft are key. Okay, Amazon and Apple are also important, but is Meta and Microsoft are key. Will they carry on this bull run? Anyway, enough of me, talking about that. Let's have a look at the market as it currently stands. As I mentioned, if we look, this is on a daily chart. As I mentioned, again, we are looking at the S&P 500, technically reaching a 6-day of gains. Currently trading up 0.13%, not a massive number, but still higher again. Currently trading at 6,397 points. NASDAQ, again, also close to hitting another all-time high. Currently trading around 23,354 points. The Dow Jones, okay, slightly down on the 30-minute, but if we look on a daily here, again, still hovering around the near all-time high. If we look at the Mag 7 in particular as well. Tesla, up slightly for the day. Like I said, it's had a tough year so far, Tesla. Meta, again, up 1.4%. Microsoft, currently up 0.05%. Amazon, up 0.90%. Alphabet, slightly down 0.86%. NVIDIA, up 0.89%. And Apple, up 0.27%. So again, you can see there is a lot of risk-on sentiment currently at the market. The other asset which is also benefiting, this is more on the back of the EU trade deal announcement, is the dollar. Now, as we know, the dollar's had a pretty tough 2025 this year, with it trading near 4-year lows with the euro, etc., and 4-year lows against the sterling. Okay, but we are seeing a little bit of a bounce back with the dollar against the majors. Like I say, you see euro down for the day, 0.93%. It's actually currently trading at 1.116 as it stands. The same with the cable, British pound, US dollar, also down for the day. And we can really see the overall highlight of this with the dollar index, where the dollar index is trading again back up at 98 points. So we are seeing dollar strength on the back of that EU trade deal principle type thing. And of course, it wouldn't be a program of mine if I didn't talk about it. That is, of course, gold. Gold is under pressure. It's still not, in my opinion, approaching the danger level quite yet. So that amazing bull run we've had is over. But we are seeing dollar strength against the yellow metal, currently trading at $3,307 an ounce level. I'm keeping a potential eye on. Key area of interest to me is $3,271. That's what I'm just keeping an eye on at the moment. So as you can see, stocks up, dollar up. So that bullish sentiment is up. But I can't stress enough, I really think Wednesday and Thursday is going to be key to the S&P's 500. It's been a hell of a run, incredible run. And like I say, after all runs, all marathons, things have to stop to catch its breath. So anyway, but I think till we know that moment is coming, or till it has a rest, all relies on what's happening on Wednesday and
Thursday. Anyway, don't forget, this is indeed a live show. You can ask me questions anytime you wish. Or simply say hello, share with me your ideas, what you think, what you're trading, even. As well as that, if you're indeed watching me on YouTube and you like this sort of content, by all means, subscribe. If you like, hit the notification button so you know next time I'm going live. And if you like this type of content and you put up with my over-the-top enthusiasm for the markets, which I can't help because I'm passionate, by all means, give me one of these. It's nice to know that you like what I do. As well as that, if you're not part of the OneRoyal family and you wish to know a little bit more about us, there's a link in the description below. By all means, click it and have a look, and you might want to join the OneRoyal family. The other thing I've noticed as well, a lot of people go back to watch the recordings, which is great. I love any sort of type of support, and because let's say a lot of people could miss their lives. I get that. It's great. So if you are watching the recording and you do have a question, put it in the comment section below. I will see it and I will reply to it next time I go live on air, which is practically almost every single day when something is happening in the market. Anywho, despite the technical issues which we had at the beginning of the show, which is just typical, but like I say, it's technology for you. The show has to go on. And for those of you who watched the first 5 minutes of me, talking but not hearing me and putting up with it, I thank you, till we managed to get it fixed by my technical companion, who might saw his arm come in to help. His arm's a star. But anyway, those of you who did see me with the technical issues at the beginning, thank you for your patience. I really appreciate that. I really do. But anyway, if there is no questions, or no one wants to say anything or tell me what they're trading, not a problem. Leaves me to say then, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.